We all know who ICT is, and in today's video, I'm going to be breaking down one of my favorite strategies of his that allows you to have a setup every single day and allows you to print money in these markets every single day. So let's get straight into it. Welcome back, family, and if you are new to the team, welcome to the team. My name is Divine. I am a six-figure funded trader with Top Step on my way to make my first six figures in the market. And my job is to make trading as simple for you as possible. So with this video here, if you don't know, ICT is that guy. I've studied him. I've also studied some other people, but ICT is the foundation of my trading and understanding the markets in total. And if you are one of those people who want to study some ICT or even learn little things, this is the perfect strategy for you to level up your game because it's very simple. There are setups every single day and it is a money printer. All you need to do is collect data, watch this video, and then by the end of this video, I guarantee you'll know exactly how to move forward in the markets and be ready to make money immediately. So let's get straight into the video. All right, team, this is going to be a quick video. If you find value in this video, make sure you do me a solid, please, because it does help us grow. We have been growing, and I appreciate everybody who is new to the channel. And of course, the family that's already here, man, we all a family. So let's get straight into it. Just hit that subscribe button, hit the like button because it does help. And let's get to it. So this is a very, very simple strategy. You know what I'm saying? And somebody told me, say, yo, look in the camera when you're talking to the family so y'all can build a connection. I got y'all, man. Y'all my family. I'm gonna make sure I look at the camera. I just be in there. I'm trying to get y'all right. You feel me? But anyways, this is called the optimal trade entry strategy by ICT. It is very simple. If you want to learn from him in this video as well, just look up ICT OTE. And by no means am I trying to take this and make it whatever mine is his. This is, I'm just taking how I utilize it on a day-to-day basis if I utilize it. And I want to make sure I'm sharing it with y'all and provide y'all some value. So what we are looking for is a couple things. We need a couple things before we start. One, you need to always know in how to determine direction. If you don't know how to determine direction, daily bias, whatever it is, go look at some of my past videos because it is very simple, right? You want to know who's in control, bulls or bear, or are we consolidating, right? Secondly, if you don't have a fib retracement, which is this little thing over here, you want to get that. And then I'll click here so you guys can see this. These are the settings that you want to set up on your fib. The most important is the 618 and the 0.705 level and the 50%. Make sure you set that up, pause the video, and go from there. Now, what we want to look for is our time, right? New York session. All right. If you trade New York session, so that means from 8:30 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. This is the only time window that we have, right? So let's just imagine down here, this is our time window right here. You find your entries during that time. Now that does not mean you have to, that does not mean that you have to exit at by 11 a.m. But you want to be in the markets finding that setup before that time, and preferably closer to 8:30 to 9:30, 10 o'clock Eastern Standard Time, because the volume is heavy and beautiful, right? So all we are looking for is, one, we were bearish. Obviously, we had some sort of a market shift here. We swept some liquidity lows. I like to add that in because that is my strategy. And then we want to see a displacement to the up or displacement to the downside. When you ask me what is displacement, really quick, the market is very, just regular moving, and then you get this big move, right? Displacement in the market. You want to see that displacement because it gives us conviction. It shows us that, hey, one side has completely took control, and we want to make sure we recognize that footprint and align it with our higher time frame, of course, and we want to align it with our bias as far as direction. Now, we will be on the 5 minute opposed to the 1 hour that we usually use if you watch the other videos. So we are on the 5 minute. We got our premium and discount levels, which is our fib retracement, and we have our time, 8:30 to 11 Eastern Standard. All we are simply looking for is a liquidity sweep, like we always do. We want to know that it's moving in our direction, and we want to have some sort of a trending market to the upside or a trending market to the downside. We do not want sideways action ever. All we want to say is we want to see that displacement to the upside. Once we come back, once we see that low, we take our fib and say, hey, listen, we take our fib low to high. Now, in these levels, we have our 50%. In these levels, we have our 50%. We have our 6.618 or 0.70. It is another level in there, but I'll just keep those two. And then we have, our deep, deep discount. The importance of these levels is under that 50% is where we're looking to enter the market. So we want to see the market make that displacement to the upside, and then we want to see price come back into our discounted levels, preferably the 6.618 level, because that is our optimal trade entry. And then we want to catch the move and get in there and enter the markets. Very, very simple. And the same exact thing on the opposite side where we have our sell. We want to see some sellers step in the market. We get a big move of displacement. And then we actually see we map out our high to low, like we talked about in previous videos. And then what we want to see is price comes back to that deep discount above the 50%, preferably around that OTE. It can also come up to the 0.70 level or the 0.79, which is a little bit more than that. And then we want to make our move down there. Now, let's say, for example, that price is coming back to this level, but it's like 11:30 a.m. Stay out. We want, remember, 8:30 to 11 a.m. Not a must, no more. In between those times, because we get the most movement, we get the strongest movement, and that's where we want to stay at. Keep it very simple. So all we are looking for is a directional bias on the 5-minute chart. We want to see a displacement to the upside or a sharp move to the upside, aligned with the higher time frame, as we already would know. And then we want to let price and allow price during our time window, 8:30 to 11 Eastern Standard Time, to come back to our discount optimal trade entry, which is at 6.618 level or that 0.70 level. And then we take our entry and we expect price to go at least simple 1 or 2. So let's go over some examples right now, because I do want this to be a quick video. And most importantly, at the end of this video, you'll know exactly what to do, but you'll be able to go collect data and then implement this in the market. So let's get straight into it. All right, guys. So let's get straight into it. So as we look here, this is what we want to see. So first things first, we want to map out our time window, right? We want that 8:30. You can do 8 to 11 Eastern Standard, but 8 to 11 or 8:30, which is on my screen, to 11 o'clock a.m. That is first things first. You want to know exact times in the session you are in, because that is the most important. It's always time, then price. All right. Next thing you want to see is, hey, we are trending to the upside. We won't see all this action here, but we know that we just had a large move to the upside on the previous day, and we came into a level of consolidation, obviously. Now, this right here, we obviously tapped into something, right? When we look at this, we want to say, okay, cool. What are we tagging into? Because that is very important. Though we are in the lower time frame, we still want to align our supply and demand or liquidity levels together. So as you can see, we took Asia lows here. We tapped into some sort of demand. And now, remember what we said, we want that sweep of liquidity, but we also want that market shift, which we get something here that shows us, hey, market is starting to move in another direction. Cool. Now we back out our fib and we go from low to our high that was created. How will we know that this is the high? Very simple. You see, we make a high, we come down a strong, strong candle, and we actually tag right above that 0.618 level. So what I would do in this case is, really, you have to align it with supply and demand, right? This is another level of it, right? So all we want to say is, hey, what levels in here are nice? Okay, cool. We have this level here. Beautiful. We drag that over, and then we take, again, we have our fib lined up, and we say, hey, we just want to wait for price to come in a discount. It does not have to hit these levels, but the most important, it doesn't have to hit these levels precisely. But the most important thing is, if you use the 0.70 level, then you use that. If you use the 0.618, then you use that. If you right under 50%, then utilize that. Do not float around. If you're going to use supply and demand align with it, then do that, which is what I do. So once price gets to this level, as long as it's in the discount, I'm going to take an entry right on the head of that. I'm going to put my stops down here, and then I'm going to target a simple 1 or 2, which would be right here. And then very simple, we move this out the way, and that is our OTE. Very, very plain and simple. It happens sometimes in a very short amount of time, but you want to be available. The key things that we have here is we have our sweep of liquidity. We have a nice move of displacement with a large candle with an imbalance at a perfect time. We come back into that discount, and then we make a new high. You could break even. I don't. I allow my trade to play out to 1 or 2, and we eventually would have got there later in the New York session. So let's go look at another example. So as you can see here, we have another example on our gold, and essentially what we want to look at is, again, where are we at? Where are we trending? What's going on, right? Well, I could go a little bit deeper into this, but we want to just see, okay, listen, we had early New York session, London, morning area. We had a big push to the downside. Well, I like to say, hey, listen, let's see where time is in line first. First things first, let's see what time is aligned. So we could try 8 o'clock this time and we'll go to 11. Very simple. Now we have a high here. This high, closed below here, but we are trending to the downside. So you can say, hey, listen, I like this level. I'm going to go high to low. And then let price again. What I do, I map out my supply and demand levels. I like this entire range here or this nice order block candle, but I would take the entire range. I'm gonna map that out and say, hey, listen, I'm I'm happy with actually taking price from here. It is a nice area in the discount. We had a level of displacement. As you can look, we got nothing but black candles to the downside. We have a sort of imbalance inside of there. I'm going to take this trade. And, we get there at 9 o'clock a.m. We put our stops up here. This candle also consolidated, made a high, and then took some lows, which shows me that it was an intensive candle. It wanted to sweep liquidity, which it did. And then all we need to do is just target, what, 0.5, or you could target 1, and we eventually get to that level. And though we had another entry over here, this entry isn't valid because it's at 115. But overall, if we were on the 5 minute, this could still be something where you say, hey, I'm going to take high to low. And then price comes back into that discount. You have a supply zone lined up here. Feel free to take that trade, but it is not OTE prime time. So if you do take that loss, understand that is all time and price, not price and time, right? We know price shows us one thing, but we want to align time first. Again, we have key levels again. So we are trending to the upside. As you can see, we have demand chains all over the place, and gold is just moving to the upside. I'll keep it there. Moving to the upside, we having supply demand flips. As you can see right here, we had a level of supply kick in. We took it, retested it, made a new high, come back, retest that, make a new high, right? Let's map out our time zone. This is our time window. So price, this is an example of it presenting itself before time, but during in the middle of time, and then you can align previous lows is we come over here. This level took these nice lows, used it as inducement because this level did make a new high. We used this as inducement, tagged into this level, made a nice abrupt displaced high, right? Displacement, we have fair value in there. Very beautiful. So price will be attracted to this. And then we also have a nice a nice demand zone that we can map out here as well. Time wise, we are 8:30 around this candle here. So we are pretty clean. We take our fib from low to high. And then all we want to say is again, I don't I map out the levels, but I don't say, hey, I want the 60.618 level, or I want the level that's in the discount that aligns with my supply and demand zone. And all we want to do is lay out our entry on there, protect our lows if you want, or protect it here with a tighter stop loss. Up to you at the end of the day. And then all you do is again, easy, very easy trade. You could take the, 0.5 or you could take 1. And it is a beautiful trade, and this is the power of the OTE. So again, this is ITC strategy. I did want to share this with you guys because it is beautiful. I've collected so much data on it, and I continue to. The current market conditions, what may be a little bit tough for on the NQ, MNQ, all these things like that to trade this. But when it's a trending market, clear directional bias, buyers or sellers, not equilibrium, it is very smooth. So always remember, you just need time. First, you need your premium and discount supply and demand levels, and you want to map out those levels and understand who's in control, and then you attack it. So if you guys found this video helpful, make sure you hit the subscribe button because it does help me, and I'll see y'all later.